All right. Hey, everyone. Mark here, Mark P. Markets. Thanks for joining me for my U.S. stock market open analysis session. Now, I'm streaming this on YouTube. I'm not on TradingView. And in these sessions, I stream these actually every day, but privately for my chat community. But I'm going to bring these out into the open so that others can see what is going on here. And also, I can speak more freely as well. So with that being said, here's how this works. Okay, I'm going to be going over the major markets. These are usually 15 to 20 minutes, maybe a little bit longer, the session. And I have the opportunity to answer a couple of questions, but this is not like the Q&A session that many are used to on Mondays. Okay, so again, I'm looking to stream this on this channel every day. If you notice, I changed the name of the channel. Anyway, let's get started. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now we're going to begin with Bitcoin. Okay, here, let me just get this thing set up here. We're going to begin here with Bitcoin, and I'm going to go through all the major markets. Hey, Stian, how are you? All right, good to see you. And by the way, since I can speak more freely here, if you're not familiar with me, you can check out my website at markpmarkets.com. I have my training program there. Also, if you haven't joined my Discord community, you should. It's free right now. I am putting up a paywall very soon so that, the information that's available right now, which you can see in the active investor channel, will be, is going to be for pay. I have a lot of plans to really put more signals and better quality experience in that channel. Okay, cool. All right. Hey, Guy, how are you? All right, great. This is why I opened it up, because I wanted to make this available to more people, and I want to be able to communicate with more people as I do these streams. Again, this is a very valuable stream because I'm giving you an idea of what to expect for the day. Okay, this can be helpful if you're a day trader. This can be helpful if you're a swing trader, especially when things change, because things change all the time, as you know. All right. So anyway, I don't have the link to the Discord in the YouTube thing here. If I get a chance, I'll in fact, maybe, no, I don't want to type it in now. If anyone has that link, maybe Stian, maybe you have the invite link. If you want to put it in the channel, maybe this thing will take it. Anyway, I want to get this stream started. Okay. So also, for non-US investors or non-US traders, I am sponsored by 8Cap. Okay, 8Cap Partners. They are an Australian broker, Forex and CFD broker. They have a numerous amount of markets that you can trade. And if you open an account with them and deposit $500 and trade one standard lot of volume, you can get my training program for free because they are willing to pay for it on your behalf. Okay, so again, that's for non-US investors. All right, let's get started here. So let's begin here with Bitcoin. Like I said, I'm going to cover the major markets, and I may even look at some smaller time frames as well. So here's the thing, and for those that watched my stream yesterday on TradingView, I've been talking about this. If you read the article that I wrote on TradingView, if you notice here, this market is going nowhere. So right now, again, this thing's up, 94 points. People get excited. People can't control themselves, okay? And meanwhile, all we see here is overlapping price. So the point that I keep making about Bitcoin, and I don't have to spend a lot of time on this here because it's the same story. We have a lower high over here, okay? We have a lower high over here in this area right here. Lower highs often lead to lower lows. So the general structure still points to lower prices, even though there's some minor bullish price action in this consolidation. Okay, so don't make a big deal out of this. This thing is more likely to be a short than it is a long. That is not my opinion. That is what the structure says. Okay, I listen to the market. The market tells me what to think. Okay, I don't have an opinion. So as far as trade opportunities for today, I mean, if you're a day trader, we'll take a look at a smaller time frame here in a moment. But if you're a swing trader, there's nothing to do here. Okay, there's no signal here. You're right in the middle point, the midpoint of this range, and you have to leave this alone. Okay, flat is a position. Now, if you're looking for opportunities, you may get a sell opportunity, a shorting opportunity around that high. That would be a double top within a broader bearish trend. So there is some probability that favors that. Okay, if the signal develops, the setup develops, and you get confirmation, that can be worth another test to the 18K area. Now, can that happen today? Not likely. I mean, this can take a few days to play out, that scenario. Okay, again, that's from the swing trade perspective. As far as the long side, there's nothing here. I mean, for a swing trade, I would not be looking at anything here. The long opportunity, if any, is going to be in this area here, the 18K support. Okay, again, which can take some time to reach. Keep in mind, you can't step in front of this thing. The structure and the environment favors lower prices. Chances are this support will break, okay, if it gets tested again, especially if there's some dramatic catalyst behind it. So you really have to wait for more confirmation in that scenario. Also, if you take the aggressive long, you should have a low expectation of profit potential, okay? I can't repeat that enough times. I'm not going to say that a million times because it's a tongue twister. But the point is, you know, if you're expecting another test of the range high, that's probably too optimistic. Okay. If you're getting long here, the realistic place is the midpoint of the range. That's where you should be measuring profit potential from in that scenario. Okay. Make sense? Guys, if you have questions too, feel free to ask me a question while I'm going through this. I'm going through stuff quickly here, but you know, I am here to answer questions if possible. I want to keep this stream at like, you know, less than 30 minutes also. We're like 6 minutes in here. All right. So let's take a look at Bitcoin on a 30-minute chart. Okay, 30-minute. Yeah, for my customers, for people, for members of the chat, I've been going into smaller time frames to give an idea if you're a day trader, okay, to what levels you should be considering and what you should be looking for. All right, now keep in mind the day trader mindset is not the same as the swing trader mindset. There are obviously more opportunities on the day trade time frame, but the profit potential is going to be smaller along with the risk. You're going to be risking smaller amounts. These are the obvious levels, okay? There's a support there. You have a support right in this area right here. That's around what? The 19,300 area, all right? You have another support in this area right here. Again, these are intraday supports. You have on 19,434, okay? So these areas, now the general structure intraday has been somewhat bullish, okay? I mean, we have higher highs and higher lows. But as you can see here, this structure right here is starting to get hesitant. This is starting to consolidate, okay? Usually when you have these situations, more and more people are getting long. Hey, Alex, more and more people are getting long. And if this thing breaks to support, they all have to get out. Okay, so that can happen on an intraday basis as well. If you have a situation like that, I mean, where can this thing go? Is it going to go straight to 18K? No, not likely. But you're looking for the next support level, right? So you're looking for something like this. You know, if this thing gets into this zone over here, this area can be a support area. All right. So how is that helpful? Well, for one, if you're thinking about day trade longs, you're nowhere near any levels where a day trade long is reasonable. That's number one. So right now, you should be leaning on the short side, if anything. Doesn't mean you're taking a short. Hey, Bill, how are you? No problem, no problem. Glad you can make it. I got other people keeping me company here today. So here's the thing. You should be leaning on the short side or staying away from longs right now because, I mean, look where you are, all right? This is a resistance. All this up here is resistance. Look at this. This resistance touched a number of times. I mean, this is the 30-minute chart. So this is here. In fact, let's just consolidate a bit and put a 60-minute chart on here just to, you know, clear up the noise a little bit. I mean, for a number of hours, right, this thing has just been touching off that resistance. That is valuable to know because that's a place where you're going to be looking for an intraday short. Okay. Now, this short is in play if you had taken something like this. Again, this is an hourly chart. Do you take the signal off the hourly chart? Not a good idea, right? In a situation like this, you're using the larger time frame, the 60-minute or the 30-minute, to get a sense of your levels. But then you have to refine further and look at a 15-minute, perhaps even a 5-minute to take the actual signal off of that, because that's where you get the signal and confirmation. Because on a day trade time frame, you're only looking for 100 points, maybe 150 points. If you're looking for more than that, you have a greed problem, okay? And you can't play that way with this, oh, but it's going to move 1,000 points. It might, but the risk that you're taking is enormous, right? And you have to look at the risk. So in this situation like this, right now, it's coming off the resistance. This is where you can refine to a 5-minute or 15-minute, see if there's confirmation. If you miss the move, maybe there's a confirmation in place. I'm not going to check right now because I have a bunch of other markets we have to get through here. But if there's a confirmation in place, you wait for another one, okay? If this move is going to be significant, if it's going to move 200 points or something like that, there will be more signals, okay? So you just have to be patient and wait. I mean, that's the thing. You could set up some kind of notification so that when a certain level is broken or something like that, then you can go back and look at your computer, because it sucks to wait in front of your computer for hours and then the trade may be wrong anyway. All right. So, okay, cool. Yeah. So Saud, I actually, well, as you know, you've been to my other one. I'm taking those sessions that I do each day for clients, for members of the chat, and I'm putting it on YouTube. I'm streaming on YouTube so that people can see what's going on. I think these streams are valuable, of course, because I'm doing them, so I have a little bias. But I want to, and this is really like a test to me to see if others also believe that it's valuable, because only Bill shows up. So maybe people just don't see the message. Maybe it's not a convenient time for them. But I figure by going on YouTube, I'll have more people to cater to. Anyway, so that's the intraday situation here with Bitcoin. Okay, you guys follow me? Let me know if you have any questions. So basically, the point is, stay away from longs right now. You're looking for shorts. If you're looking for longs, wait for supports at least. Keep in mind, this thing starts breaking and closing below supports, the momentum is bearish. So it's best not to step in front of that. Okay, let's move along here. Let me move on to the larger time frame again. Again, people have no perspective and they just react to whatever they see. You can't do that. You have to look at the context. Now, let's jump into the bond market. Let's take a look at the bond market. I'm going to ZN1. Okay. And actually, you know what? Before I get into the bond market, since we're here, let's take a look at one of these altcoins, right? Because we have these altcoins. Someone pointed out yesterday, in fact, I think it was Miami CEO mentioned Quant. Okay. Now look at this. I want to point this out because, I was not familiar with this thing here. And this is a pretty significant move on the daily chart, completely going against Bitcoin, right? Just doing its own thing. So when we find an outlier like this, it's certainly worth keeping an eye on. Now, look at today, though. All right. So I warned people about the pin bar developing yesterday. That's why you don't want to buy these things at their highs. This right here is a bearish inside bar developing. We have the whole day before it closes. If it closes like this and the low is taken out, you're looking at the pullback. Okay. So not a good place to be long. If you're long, this is your sign to get out and take your money, or at least a good portion of it, because this thing is now likely to pull back. How far can this thing pull back? There's no way to know. This thing may pull all the way back to this support, okay, all the way over here. It's possible, but there's no way to know in advance, okay? So, not a good idea to short something like this unless it's a day trade. On the swing trade, you're fighting this bigger picture. And obviously, this thing is not paying any attention to what's been going on with the S&P or Bitcoin. So you don't want to fight that. The best thing to do, or the more conservative thing to do, is look for the higher low, which can take a few days to develop. We don't have that right now. I just wanted to point this out just to give some variety. All right, now let's go to the bond market. Okay, so we have ZN1. Okay, so again, I check this every day, and you should as well. This is the bond futures. Okay, if you guys are people that are not familiar with this is the 10-year note futures, and it's inverse to bond yields. Okay, so if this thing keeps pushing lows, that means yields are going higher. Higher yields, higher interest rates are not good for anything. Okay, they basically mount bearish pressure on everything, and they keep the dollar very strong. So with that being said, what is going on here, and how should we interpret this? For one, as we can see, students, right, we have a double bottom situation developing over here. And this is too early to make any judgments on the economic front, meaning we can say technically that there's a double bottom, right? It's trying to activate. It's not active yet, but it's trying. It's found some support. If this thing can rally over the next week and take out this high, then that may be meaningful. Again, that can take a week, that can take 2 weeks, that can take a month, that scenario to develop. Even if that scenario develops and we get the rally up into that area, that doesn't mean things have changed economically. It just means that perhaps the bonds are in a consolidation. If this resistance holds up in here and this thing goes back and tests its lows, this thing is then telling us that rates are continuing to rise. Right now, as we know, the Federal Reserve is on that front, right? They have no intent of holding off on their rate hikes. So this thing, who knows? This thing can find a lower high anywhere in here. We cannot see the future with any degree of accuracy. Although many people like to claim that they can, there's no way to know. All we can do is assess risk, okay? And then assign some sort of profit potential to a trade idea, right? That's the best we can do. And then it's up to the market from there, okay? And we can use market structure to kind of gauge probabilities and try to get some sort of bias so that maybe we can be right 60%, maybe 70% of the time, okay? I mean, that's like the goal. Anyway, so in this situation right here, it's trying to develop the double bottom. Maybe it does. If you were a bond trader and you were looking to buy bonds, this would be a good time. You have an inside bar, it takes out the high of this previous bearish pin bar, you have a long signal in the bond market. How far it goes, I don't know. Thing is, you're still fighting a bearish structure, okay? So as long as this structure stays intact, meaning resistance levels are respected, I would be anticipating rising rates, okay? If I'm anticipating rising rates until this changes, that means stocks are generally a bad idea. When I say stocks, I'm talking about mainstream stocks like, Apple and all the other ones. There are plenty of opportunities in the stock market, especially low-priced, particular sectors like biotech or pharmaceutical. They tend to do their own thing. So there's a lot more day trade and swing trade opportunities in that area compared to something like tech, right? Like AMD and all them, because they're going to follow, the bond market. They're basically going to be affected by the rates much more dramatically. So speaking of stocks, here's the S&P. Now look at this. Right, the S&P is right. It's right up. It's up 65 points right now. That's pretty good. Okay, pretty nice start here. The market's been open 20 minutes. We had this buy signal develop yesterday, closed, right? Took out the high today. And now look, we have a buy signal and a double bottom established in the S&P. That's interesting. So, I mean, I just finished saying, bad idea for stocks. Well, if you're looking to invest, this is not the best time because of that bond situation, right? But as far as swing trades and day trades go, especially day trades, there's something going on here. All right. So first of all, we have a strong day developing right now. It doesn't mean that it will continue this way. There may come a point today where this thing turns, and by the time this thing closes, it could be a bearish pin bar. You have to keep that in mind. Don't just react to what you see here. Now, again, we have this resistance on the S&P, and that's 38.07. So you can round that to the 38 even area. This thing's at 37.51. Can this thing run another 50 points? It can. So keep that in mind. I mean, it's starting out pretty strong, but you have a resistance area coming up. So this basically puts a cap on swing trades, right? You're going to have some swing trades that may be looking promising. If this thing sticks to this resistance and respects it, then they're all going to fake out. Most likely, okay, stocks like Apple and all them. So again, this is not something to expect today, but as far as the S&P goes, you're near a resistance. So use that to your advantage. There may be some stocks that are setting up on the short side, okay? It may offer some good options opportunities, whether you're doing like a bear put spread or something like that. Verticals are the best way to go, I think. If you want to do outright calls or puts, you would be thinking about selling a call, but you're better off hedging yourself and protecting yourself, right? Because it's all about the risk control, not the profit potential, which is what everyone is always focused on. Anyway, that's the S&P, all right? So you're near a resistance. Don't get sucked into this. Now, let's take a look at the Nasdaq, all right? NSX, USD. Bill, you have a question there, AVXL. Is that a stock you want to see? Because I'll go over it real quick now that we're into the stocks. So NASDAQ is the same story, right? So again, look, you're seeing some bullish price action in these situations. You're going to see a lot of talk. I mean, look at this. Look where it is. Okay. I talk about this all the time. Look where it is. This is in a good position to develop a lower high. don't get sucked into the bullish nonsense. Everyone in the world, the industry in this game is not out to be your friend. They want you to take action. So you're going to see a lot of bullish talk. Santa rally begins early, blah, 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 all these other ridiculous headlines. Don't trade on that information. You're going into a resistance area here, okay? So there's a lot of risk on the long side. Now, if you're a day trader, that's another story because you're in, you're out, you don't care. But if you're a swing trader, there's a lot of risk here, okay? So I would not be looking for longs right now. The place to be looking for longs, again, would be any retrace to the test of low, possibly, or a higher low. Those are your swing trade opportunities, or perhaps break of resistance, pull back to higher low. Again, we're talking that can take a week or two to play out, okay? So keep that in mind. Don't lose sight of this broader structure. No resistances. I mean, you can argue that this little mini one over here was taken out, but that's minor relative to these larger ones, right? These larger reactionary ones here. So right now, the key level is going to be 11,669, so 11,7. As long as this thing is below that, expect lower prices, okay? Or I should say they're more likely. You don't want to think in absolutes. Never think in absolutes, but always try to put a probability on something. Just like a poker player will put someone on a hand. They'll say, oh, I think that player has these cards based on the way they're betting, right? Or the way they're not betting. I mean, that's what a poker player will do. And then they will make their decision based on, you know, what hand they think you have, especially if it's just one-to-one, like you and another guy, you're trying to put him on a hand, right? Same thing with the market. Okay, now let's take a look at the Nasdaq on a smaller time frame. Okay, hold on. So let's go to a 30-minute. All right, again, this is for day traders now. So if you're a day trader, so we just looked at that bullishness, right, on the daily chart, and it looked impressive. Well, now when we look at this, what's this? I mean, so the market's now open 25 minutes, and we have a bearish engulfing candle on the 30-minute. There's something called opening range breakout. Okay, it's an old strategy, all right, that's been in use for quite some time, and it's very helpful for day traders. I don't take trades on that because the signals are they're very random, like anything else. But there is some statistical significance to the way the market opens and how it closes after the first half hour. Okay, so we're about 30 minutes into this. Look at this candle, right? So this is a bearish sign. Not only that, intraday, but it's a failed high relative to this high. So what does this mean? You're still, keep in mind, so we have this bearish development, you know, that's sort of unfolding right now, but it has yet to take out any supports. Okay, so what do you do here as a day trader? Well, for one, if you're thinking about shorts, it's possible you have some momentum. You need to refine that. Of course, you're not going to use a 30-minute chart. You're going to use a smaller time frame, like a 5-minute chart, or maybe even smaller. You're looking for a movement or a momentum continuation into this support level, okay, which is 11,200 area, right? This thing's at 270. As a day trader, you're only looking for 20 points, 30 points in a market like this. If you're in a stock, it's going to depend on the stock and, you know, the average true range of the stock, you know, of each candle and the time frame that you're on. But the point is, this is the movement you're looking for. If this thing breaks below that support, then this structure becomes basically, it's starting to become negated. Okay, not the whole thing. You may find support at the midpoint, but the point is, this structure may no longer be in play if the support breaks. So then you're looking for lower highs. Do you see how to use this information to judge your decision making as the market changes? If you follow it like this, you let the market lead. Okay, you're listening to the market. You're not sitting here, oh yeah, this thing's going to go here first, and then it's going to bounce, and then it's going to do that. You're not saying that. You're saying, let me see what the market's going to do. You're being passive. If it breaks, that's a new piece of information. Okay, a lower low means a lower high is likely to follow. Now you can put your weight or your probability on that idea. Okay, maybe it fakes everyone out and goes for the higher high, but you know, again, if that happens, you adjust. You're always adjusting. This game is always about risk, not reward. All right, does that make sense to you guys? Okay, let me see what we have here. Failed low on ZN1. Okay, hey, no problem, Alex. Well, wait, I talked about ZN1. If you go back, it's basically like a failed low double bottom situation. So, but economically though, like I just said, it's not very significant. Okay, as a day trader or as a swing trader, it could be, but not on the economic front. I'm not thinking that the market's putting in a bottom just because the bonds are doing something like that. The bonds have a long way to go before they prove anything. Okay, so that's the Nasdaq. All right, let's move along here because I talk too much. All right, and I want to keep this at like a half hour, and I'm probably going to go a little over. Anyway, so you guys got the Nasdaq. Now let's take a look at the dollar index. Okay, because anyone that's involved in forex or even some stocks and stuff like that, you really need to be aware of the dollar index because this is a big driver in a lot of things. Okay, and this is basically a reflection of the bond yields. So look at this, right? I've been pointing out this consolidation here. Oh, okay, cool. Hey, Bill, you wanted to see AVXL, right? Because I'll do that one after this bond market chart. So here's the thing. We have this consolidation here, and people they're gonna focus on, I'm gonna tell you right now what you're gonna focus on. Oh, look, lower high. Dollar must be getting weaker. Lower high in a broader bullish trend, okay? Don't lose sight of all this. So it's a lower high, but there's a higher low right there. So what do you do in this situation? Well, for one, your bias should still be bullish. Maybe short term, maybe intraday bias is bearish. Okay, but bigger picture, bullish. So if bigger picture is bullish, that means there's a good chance this thing tests its high over the next few days. Now, there was no major economic news on the calendar. All of you should be familiar with the calendar. I mentioned it yesterday. There's no major news. Yeah, we have some news from some other countries, but there's no dollar heavy news, right? So there are no major catalysts that can really cause a dramatic move one way or another, but it doesn't mean that we won't get some kind of surprise. A surprise can come out of nowhere. That's why it's called a surprise. So here's the thing. It's trying to find some support right now. We have this little doji situation, okay? This would be basically like a range low, right? A little mini range low. If it finds support anywhere from here to this low of 110, whatever, right? Then that would be basically a consolidation or the equivalent of like a double bottom, a higher low double bottom within a broader bullish trend, which is a bullish sign, okay? If we get something like that and just consolidates maybe for a couple of weeks or whatever, right? It may break out higher. That is what the bias favors. So with that being said, don't be sitting there thinking that the dollar bullish trend is over. So you should be leaning what? You should be leaning bearish on the euro. You should be leaning bearish on the pound or anything, you should be leaning bullish on the dollar franc because that all comes from this chart here. Does that make sense? And if this thing starts to push higher, it will probably put some pressure on Bitcoin as well and the altcoins because they don't like a higher dollar. All right, let's move along here. So AVNX, cat stepped. Okay. No question. Oh, okay, no problem. All right, no problem. So let's move along here. Let's now take a look at gold, XAU, USD. All right, now gold is going to be tricky. Now, someone was talking about gold in the stream yesterday about something with gold miners and they're going to be buying gold or blah, 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 right? As I pointed out, metals are very emotional. They're very dramatic, okay? So you don't want to get caught up in the drama. There's always a conspiracy theory in metals, always. Ignore that, please. Look at the price action. Look at the dollar. I've been warning people about gold forever because the dollar rising is not going to be good for gold, right? And gold has been doing nothing but pushing lows. So we have this initial push recently. People are going to be looking for the higher low, right? So far, it's trying, but what's going to carry gold? A weaker dollar, which we don't have? So keep in mind, the bias here is still bearish, okay? If you're looking for something in gold, if you're looking for longs or you're thinking long-term gold, be patient. Take small bites. You want to start accumulating gold stocks? Go ahead. Small bites. Because, I mean, look, let's just take a look at Newmont Mining real quick, right? NEM, which is a very popular gold stock. I mean, look, it's been consolidating, right? If gold breaks lower, this will probably break that consolidation. I mean, look how far off of its highs it is. So you want to accumulate some of these stocks, right? Newmont Mining is a good stock. You take small bites. Now, when I say accumulate, I mean, we're talking, a multi-year strategy, okay? So that's not going to be something that's going to change anytime soon. We need to see the bonds change, right? And then they'll start to pick up. So you want to start buying some gold, consider the stocks, small bites. Now, if you're looking to short the CFD on gold, that would be very reasonable. You have an inside bar, right? Now, if the low of this current, of yesterday's candle, 1644, if that's broken, you have a sell signal. Now, keep in mind, this is a risky location, right? There's nothing safe or conservative about that location, meaning a double bottom can develop and you can get squeezed. Squeezes can look like this, okay? So if you take that type of position, you need to be on top of it. You need to be on top of that risk because it can turn the wrong way very quickly on you. You have to be prepared to take that loss. Don't sit in it with some kind of opinion saying, well, gold is weak, it'll go lower, it'll go. Gold may do a ridiculous and irrational run before it goes lower. You don't want to get caught in that. Take the loss, okay? So that's a possibility. Otherwise, to short gold, you really should wait for a resistance level. Wait for some kind of test of something up there, and you have a much more reasonable idea with a reward risk that's more favorable and a probability that's more favorable compared to here. Yes, this can break. If the dollar spikes, this will break the low. Just understand the risk. Understand, the high risk of squeeze, okay? If you put that into perspective, you're more likely to make the right choices. All right, so that's gold. Let's jump over to the euro now, all right, for all my euro people here. All right, so here's the thing. Euro is acting a little strange, wouldn't you say? We have a higher low here. Now it's getting stronger. Maybe there's some news or whatever, right? The euro is going to have its own factors that affect it, just like the euro, has been pushing low after low after low, because on top of the dollar, rising oil prices, rising energy prices are going to weigh on the euro. We don't have to sit here and be an economist to know that the chart has been nothing but bearish. In fact, for those of you that may not be familiar, I call the euro short off of this signal over here, okay? On Thursday, October 6th, I called that short. I got out on Thursday, CPI day, I got out here, okay? How was I able to do that? Let me tell you, no oscillator helped me. No special magical tool helped me. I looked at one simple thing. CPI had come out, okay? Everything was pushing lows. Nasdaq was on its low. S&P was on the low. Dollar was pushing higher. And euro could not push the low. It was 20 points or 20 pips off the low. I said, this thing should be lower. I'm getting out. And I locked in 160 pips. Okay, that's all in the channel. It's all in the Discord channel and in the chat group community there. If you look in the trade history, I put it there. But the point is, and there's a learning opportunity there, because again, to get out of that, everyone looks at just what's obvious. If you had taken what was obvious on that day, I looked at the oscillators and all that, right? Because I just wanted to see how wrong they were. They were all pointing bearish, only to have the day close hard bullish in your face. You cannot use those conventional tools, because then you get caught in situations like that, and then you wonder why. All right, the whole world was obviously short, and they got squeezed. I don't care why. I don't sit there and say, well, why? The CPI came out too high and blah blah. The market's irrational. The market knows more than me. That's all I need to know. If the market wants to close strong, that's what it wants to do. I recognized the relative strength early on, and I managed to get out at a good price, and I protected the profit in that trade. If I had stayed in that trade, this thing would actually be against me right now. The entry in that trade was 98.15. Okay, this thing's at 98.54 right now. So this actually would be a red trade right now, or stopped out for break even, because I was moving my stop. I had mentioned that a couple of times. But anyway, the point is, that's how I got out of that. Had nothing to do with all this magical tools that are available. It's unbelievable the ideas that these websites imply today. I mean, I've been looking at a bunch of them, and one thing after another saying, if you use these tools, join hundreds and thousands of traders that are making profits and consistently and blah, 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 blah. And the tool is $30 a month or $40 a month. Do you think a tool that cheap is going to generate a profit for you? If that was the case, they would not sell the tool, because hundreds or maybe thousands of people have access to the same tool. There's no advantage. Okay, keep that in mind. There's no advantage. Scanners and things like that can have some value if you understand what you are doing first. Okay, Like I can use a scanner. I don't need the magical tools because a scanner helps me efficiently keep track of more markets. So I know the setups I'm looking for. I know the context. So that's how a tool like that can help. But as far as their trade signals or their artificial intelligence and all this other nonsense, those are just gimmicks. Okay, they're gimmicks, and there's no way that they can possibly beat the market and make that available to everyone. It's just not possible. Okay, anyway, because again, markets are random. Let me see here. There were some major moves by the British PM. Okay. I'm just going back here. Germany started printing again. This could, well, again, I don't know what their story is, right? Because I'm not following the economies in those countries. I'm just looking at the dollar pretty much. And I'm looking at, any type of economic developments in this country since we are still the world reserve currency. So I'm going by that. I don't make any trade decisions on that, but you can skip my question too. This is much more interesting. Okay, cool. I appreciate that, Golden Boy. Thank you. I'm sorry. Oh, okay. All right. I got to wrap this up here in a couple of minutes anyway, because again, these are not supposed to be like Q&As and an hour long like the other one. These are supposed to be 20 minutes. Okay. But of course I talk too much. All right. Anyway, so I'm going to finish this up on the euro here. Again, so what do we do with this situation? All right. I just wanted to talk about the trade idea that I recently had in this thing, and I'm watching this thing for another sell setup. We almost had one back here, but it never actually went into play. All right. That's how you save yourself money and actually produce a profit, is by staying away from trades that are not likely to work out or would be a would-be stop out, right? If I had taken this red candle just because it's a red candle, it would have stopped out also. But there was no reason to get into that trade at all. So I was able to filter that out, right? So I'm still looking for shorts. Excuse me. I'm still looking for shorts in the euro. This thing is the inverse of the dollar, okay? So if this thing turns into a bearish pin bar, this is a good location. Look at the old support in the area. Look at that. So I'm very interested in the location, but there's no reason to get involved just yet. Bearish pin bar develops and closes that way, then we have a setup. If it takes out the low, now we have confirmation, okay? And I can also measure risk at that point as well. The reward on something like that can be measured, again, by these 96 half lows, okay? Somewhere like that. Now, since the euro has been pushing new lows, it's possible that this thing can test the overall low again. Again, of course, the dollar will have to be pushing new highs, okay? So there can be some economic catalysts involved in that. I'm not going to sit here and get wrapped up with that. I'm just looking at the price action. I'm looking at the levels and potential setups. So again, intraday, if you play euro intraday, there's really not a whole lot to do here. You're near a resistance level. Perhaps there are some longs for 10 or 15 pips, possibly, because the day is strong at the moment, but that can change quickly. Again, I haven't looked at an intraday chart here, okay? So as we saw with the Nasdaq before, that chart started out strong, and first thing we see in the first half hour, red candle. So that's not exactly, that's not exactly a signal of a strong day to follow. So keep that in mind. All right, you guys. All right, so I'm going to wrap this up now. Let me just put Bitcoin back up here. I'm going to wrap this up now. Again, if you have any questions, you know where to find me. Make sure, if you're not in my chat community, make sure you join it. I don't have the link here. Let me see if maybe I can type that in real quick for you guys. Let me see. Let's see if I can remember it. I'm going to type it in because you guys should be a member of it. It's still free. Okay. Let's see here. Just type it in here real quick. I think I remember it. Okay, this is the link. Okay, and correct me if I'm wrong, but that should be the link. Join the chat if you have not. It's still free. Okay, and also if you're not familiar with my website and you want to learn more about my training program, you can go to this link here, and you can find out about how that works. Anyway, I have a webinar that I'm doing tomorrow. I sent out an invite. I don't have that link, so I don't know how to where I don't have that link publicly anywhere. It's actually in the community chat. I put it in there a couple of days ago. You could find it in there. But if you want to come to that webinar, you should. I'm going to talk about how to swing trade Bitcoin. Some of you may be familiar with that webinar, but I'm going to talk about some of these some points and some things that I have. Obviously, I'm not going to be mentioning in these streams. It's more educational. and more about, the 6 steps that I use to come up with these ideas. All right, you guys. So anyway, hey, thank you all for taking this time with me here today. It's 40 minutes now. Usually, again, I'm trying to keep this at 30 minutes. I will be on here tomorrow. So, if you have a question for me or something like that, look for me then. I will be looking to stream these every day on YouTube, okay, for this time. So let me know also if you have any feedback. Let me know. I want to improve these streams. I want to make them valuable to you, and I want them to be worth your time. All right, everyone. So hey, everyone, thank you again. Enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you for watching.